Welcome to USAWatchdog.com. I have a guy that you're probably dying to have on. A lot of people have been pinging me to have him on. What a great time to have him on with the markets gyrating like a whammo yo-yo up and down hundreds, if not thousands of points. Unbelievable. I have Peter Schiff, from Euro Pacific Capital and also Schiff Gold. Peter Schiff, I just want to start with the simple question. What the heck is going on?
Well, the real question was what was going on when the markets were going up. That's what made no sense. The fact that they're now coming back down to earth, that makes a lot more sense. But I think what the catalyst is for this move is, ironically, the tax cuts that we got, because that put the bigger deficits in a spotlight, because now the deficits are going to go off the charts because we have to replace the lost tax revenue with more debt. Now you've got this reconciliation bill that's going to add more pork barrel spending for Republicans and Democrats. You got this infrastructure spending. You're going to be sending the budget deficits well above $1 trillion a year. The trade deficits, we just got another trade deficit today, biggest in 9 years. But if you take out oil, it's the biggest monthly trade deficit in the history of America. Trade deficits are exploding. Budget deficits are exploding. That's why interest rates are rising. That's what's pushing down bond prices. That's why the dollar is falling. That was the same toxic combination we had in 1987, which led to the stock market crash, which is why I've been warning about that the last couple of weeks, that I thought the probability of a market crash was heightening based on how oblivious everybody was in the stock market to these growing risks. And also got to remember, the last time that we ran $1 trillion deficits, the Fed was doing $85 billion a month in quantitative easing. That's $1 trillion a year. So that enabled us to finance those deficits. Well, not only is the Fed not doing any quantitative easing now, but they're threatening quantitative tightening. They're saying they're going to start letting the balance sheets, the bonds on their balance sheet, mature, which effectively means they're selling bonds in competition with the Treasury. And so who's going to buy all these bonds? We're about to flood the world with treasuries, and that's why they're tanking. And what's going on is interest rates are rising. We're broke. This whole economy, the stock market, the economy is based on cheap money. Cheap money goes away. The entire bubble that you erected on top of it comes collapsing down.
What's going on with gold? I know you were in I think Vancouver, talking about now's the time to buy gold. Oddly enough, Nomi Prinz, a former Goldman gal, was talking about buying physical metal and exiting the stock market just about a week ago. She says, I'm telling people what I'm doing. I'm getting out of the stock, taking money off the table, and I'm going physical gold. Why hasn't gold taken off with this gyrations? You think people would be running to safety, or maybe they're running to treasuries? Why isn't gold taken off?
Because I think people still don't understand what's going on. I mean, basically, there's two possible scenarios. Right? The market keeps crashing. Right? Interest rates keep rising. The market keeps crashing. And that's good for gold. I mean, gold's a safe haven, right? And, gold's been rising. So if we continue with the current decline, I think that's good for gold. But alternatively, if the Federal Reserve decides to prop up the stock market, to save Trump or to save the economy, and they decide to call off the rate hikes or do QE4, which I think they're going to do, then that's extremely bullish for gold. So it doesn't make any sense to me that people aren't rushing into gold, especially when you got now cryptocurrencies crashing. Now Bitcoin has dropped by 70%. Some people were saying, oh, why do you need gold? I could just buy Bitcoin. It's digital gold. Well, it dropped. It's falling more than the stock market. So that's hardly a safe haven. So people should be buying gold. I don't know why they're not, but there's an old saying, don't look a gift horse in the mouth. As far as I'm concerned, that's exactly what you have right now. So buy gold from anybody who's dumb enough to sell it to you at these prices.
The tax cuts, I'm looking at the economy like two rails. And in one rail, things are getting a little better. Jobs are coming back. They're making all these announcements. They're paying bonuses. A lot of companies made announcements to expand in the United States. But on the other rail, we're supposed to be borrowing, I think, reportedly another $1 trillion this year. Can you decipher the debt in the economy and the actual economy, which, listen, I like Trump. I'm good for him to try to bring it back.
Well, first of all, the myth of the economic, expansion under Trump has been highly exaggerated. I mean, first of all, since Trump's been president, we've had the slowest job growth since 2010. So the jobs are not roaring back. Wages are not exploding. Yes, you did have that 2.9% jump in year-over-year wages, but hours worked went down. So people earned a little bit more money, but they didn't work as many hours. So real income was up 2.6, but it's not real because it hasn't been adjusted for inflation. And I think prices rose by more than that. So I think real wages are actually falling. They're not rising. What is rising is the trade deficit. The trade deficit expanded by 12% in the first year of Trump. He ran as a candidate saying that we were losing on trade deficits. Well, now we're losing big league. We're losing even more wealth while he's president. So there is no job growth. The trade deficit is getting bigger. The GDP, the trade deficit was so big that they're going to have to downwardly revise the fourth quarter GDP, which was only 2.6. Who knows where it's going to go? But by the time they revise the entire year, which I think was 2.3, I think they're going to revise it lower. And it's going to turn out that the first year under Trump, the economy grew by lower than the average of the 4 years of Obama's second term. So growth hasn't even picked up. It's actually slower. So this is all nonsense. The economy is not improving. Nothing is happening except we're going deeper into debt. And this is a huge problem. And yes, we have some tax cuts and we borrowed the money to pay for them. So we're putting all this government on a credit card, but that is a more expensive way to pay for it because we got to pay the interest. And of course, we end up with more inflation because the Fed ends up monetizing it. And that is what's going on. You're going to return to stagflation.
Let's talk about QE4. What you're setting up is they'll all know this behind the scenes. No matter what the numbers they put out in front of the scenes, they'll know the real numbers. Is this going to be the catalyst to start another round of QE or QE4 or whatever they call it this time? Is there going to be another round of money printing?
Well, there's no question in my mind, because the alternative is just politically unacceptable to anybody, which would be a worse financial crisis than 2008. But, when we go back into recession, when the market is in a bear market, they're going to go back to the only formula that they think works. They can't even do rate cuts because rates are so low that they can't really cut them very much. So the only real stimulus that they can reach for is going to be QE, but it's not going to work this time. It's just, we're going to overdose on quantitative easing. It's just, there's no more bubbles that they can blow. They've already blown the mother of all bubbles, and this is it, right? There's no more. So I think when they launch QE4, we get a currency crisis. We get a sovereign debt crisis. That is where we're headed. I mean, that's always been where we're headed. It's just taken us a longer time to get there, but we're getting there. And because it took so much longer, in the interim, the problems got so much bigger. The bubble got so much bigger. So it's going to be much more disruptive when the air comes out.
Is Donald Trump, he said something about Puerto Rican bonds. I know you have property down in Puerto Rico. And he said that, they owe 74 billion with a B, but still it's only about 3.5 million people that owe $74 billion. North Carolina has 10 million people. I think we owe 3 or 4 billion. But at any rate, I digress. He said something pretty instructive and the market kind of shook it off. And that was, we're going to wipe that out. We're not, he wasn't going to ride in and print money to pay that off. So if push comes to shove with debt and default and things like that, like Puerto Rico, like he said, we're not paying that off. They've basically defaulted on that debt. But you know more about it than I do. Is he going to let some companies and let some people go? Is he not going to be printing all this money to bail everybody out?
Well, remember, the decision to print is the Fed's, right? Powell. But I do think that there'll be a lot of political pressure on the Federal Reserve to monetize all this debt. I mean, the Treasury doesn't have to default the way Puerto Rico would default because Puerto Rico doesn't have their own central bank. They just can't print money like the Federal Reserve can. Although the Federal Reserve can choose to monetize Puerto Rican government bonds if it wanted to. I mean, it bought all kinds of crap during the 2008 financial crisis. They bought all kinds of, subprime mortgages. So if they wanted to, they could buy up all the Puerto Rican debt, right, and just shove it on their balance sheet with all the other toxic crap that they have. But they're more likely to do that with U.S. Treasury debt. But the reality is Puerto Ricans can't afford to pay the debt, and neither can Americans. I mean, on a per capita basis, even adjusted for relative differences in GDP and income, Americans are actually more broke than Puerto Ricans, who are also Americans. But remember, when you live in Puerto Rico, you're not on the hook for the $21 trillion national debt, because I'm in Puerto Rico, and when you live in Puerto Rico, you don't have to pay any federal income taxes. So if the federal government has to raise taxes to service the debt, it's not raising them in Puerto Rico. It's going to raise them in the other 50 states. But the reality is Americans are broke. They have no savings. There's no way we can repay this debt. So it's only a question of how we're going to wipe it out. And I don't think we have the integrity to do it the honest way. So I think we're going to do it the dishonest way with a printing press. I mean, that's what governments have been doing since they probably invented the printing press. They did that in Weimar Republic, Germany. They did it in Argentina recently. They did it in Zimbabwe. We got the same monetary policy here. We're going to do the same thing. We're just going to print a bunch of money, and we're going to pay everybody off in money that has very little value. That is the real risk. That's why the dollar is already weakening. Last year the dollar had its biggest drop in 14 years.
Yeah,
up in 5. This year, the dollar is off to its worst start since 1987. So, I mean, that tells you something.
And you think the dollar? Some people say that this is just oversold, type of thing. And when the economy comes back, it's dynamic. That's what they say on the other side of the argument. And they say the economy's dynamic. It won't be as nearly as big as a deficit because everything's going to rev up, and the dollar will come roaring back, and things will be just peachy keen. And you say?
That's true. I mean, the economy is not dynamic. It's not roaring back. But the reason the dollar is as high as it is because that is the speculation that currency traders were making in 2013, 2014, 2015. Everybody was so optimistic that the Fed's, the policy worked, that they were going to be able to normalize interest rates, to shrink their balance sheet. And based on that, the dollar got bid up. Well, I think everybody was wrong. It wasn't a success. It was an unmitigated failure. It's just that the people buying the dollar didn't appreciate that yet. They will, because when the Fed has to go back to the well, when the Fed has to go back to QE, when the Fed has to slash interest rates again, after never having normalized them, after never having shrunk the balance sheet, which hasn't shrunk at all, it's exactly the same size it's been. When the Fed has to do that because we're back in recession and they got to prop up the market again, then everybody is going to realize the position that we're in, that this is QE infinity, that there is no end game, there is no graceful way out, there is no soft landing, that once you do this, right, once you check into this monetary roach motel, you can never check out, right? We have made a deal with the devil. We have built an economy that is completely dependent on an endless supply of cheap money and artificially low interest rates. And when people figure that out, the party's over, because then the dollar's going to tank and then everything is going to fall apart.
I mean, when you're on CNBC and you're on Fox Business and whatever, I mean, watching them this morning, I've been watching them last night, and everybody is on there piling on going, don't worry, everything's okay, don't worry. I mean, when you were on, you come on and you have this, this cold glass of water in your face about, no, nothing's getting better. No, they've been printing money. And they're on going, oh, no, that's not true. Oh, no, buy stocks, it's a buying opportunity. Why are the mainstream media outlets and the business outlets constantly telling people buy? Oh no, don't sell. I mean, shouldn't you sell? Take some profits. I mean,
they found a solution to that over at CNBC or Fox Business. They just don't invite me on anymore. I mean, I would not care. I haven't been on in years. I mean,
well, that's their loss.
The last time I was scheduled to be on CNBC, I was on Rick Santelli, and they abruptly canceled me without any explanation. That was over a year ago. I haven't been invited on since. So I think that what they're trying to do is actually silence anybody who is not, on board with this narrative. So if you don't believe this nonsense about this bull market and this great economy, you're not welcome on their air. They don't want anybody that's going to have a contrarian point of view. Now, I mean, they used to have me on a long time ago, so obviously there's been a change of policy. Now, I mean, they pretend that they have, some bears on, but they're not real bears. I mean, they just think the market's going to go up less than the bulls. Everybody agrees that everything is great, but they don't have anybody on to tell the truth. They have nobody on to tell their audience that they're being fed a bunch of lies, right? That the economy is a mess and that they're going to end up losing money in the market, whether they lose it because the market crashes or the dollar crashes. But there certainly seems that there is a conscious effort not to have me on, and it's not that I'm not an eloquent spokesman or I'm not good for ratings. I mean, I know that I am. I know that these shows have their best ratings when they have me on. They get flooded with emails. Oh, bring them on again. People have told me that they used to watch CNBC and the only time they turn the volume up is when they see me. Well, now they probably never turn the volume up because I'm never there. But obviously, they're running these networks for the benefit of their advertisers or the big firms that come on because they don't want this perspective to be heard. And you would think that since I was so right about the financial crisis and I was a lone voice on those networks warning about the housing bubble and what was going to happen to the economy when it popped and the banks and everything, you would think they would have me on. And what's so frustrating now, too, is I look at these same fools who were debating me back in '06, '07, '05.
And they're still on.
Yeah, but they're saying the same nonsense back now that they were saying then, except I'm not there to call them out on it. Now, maybe they want to keep me off so no one makes another Peter Schiff was right video, because I don't have all that great footage anymore, because I'm not arguing with these guys because they won't let me, because they won't put me on.
Well, we'll put you on anytime. And, the alternative media has gotten a lot bigger since '08. I wasn't even on in '08. But so I'm going to play devil's advocate right now. And I'll be the guy on the other side. I don't believe any of what I'm saying, but I'll be the other guy on the other side. This is the time to buy. Don't panic. This is the time to buy stocks. We're really only off about 8 or 9%. We've been needing this correction, but just hang in there. It's going to go way high. 30,000, 35,000, 40,000. It's going to go to the moon. Peter?
Yeah, well, obviously that's not the case, but I mean, they never think it's time to sell, right? It's always time to buy. It's never a bear market. It's always a correction until the correction turns into a bear market. And then by the time they admit it's a bad bear market, they say, well, it's over now. It's too late to sell. You might as well buy. But the reality is it's much bigger than just a bear market, because what's going to happen is much more than just the stock market going down. And in fact, the stock market might not go down. If the Fed comes in and does what I think, and they launch QE4 and they slash rates, the market could go up. But it will go down in terms of gold. I think it's going to crash in terms of gold. It will go down in terms of your cost of living. So maybe your stock portfolio will be going up, but your grocery bill on a percentage terms will be going up faster. And so will your utility bills, and so will your gas bills or your insurance bills. I mean, so what good is it? I mean, the stock market was going, up and down in the 1970s. From 1966, the Dow was 1,000, and in 1980 it was still 1,000. But look at all the inflation that took place during those years, and there were plenty of rallies, but in real terms, the market was going down. And I think we're headed into a period like that, only worse.
How cheap is silver? How cheap is silver? I mean, it's like 16, 17 bucks. They just arrested 6 more people from 3 big banks manipulating it. They keep telling us that it's not manipulated, even though they're arresting people for doing it. But how cheap is silver and how cheap is gold? Isn't silver at about mining cost and gold is a little more than mining cost? How cheap are these two assets?
I think they're both cheap, and they reflect the fact that nobody is worried. Everybody thinks it's great. I mean, that's the false narrative that permeates the market, that the economy is booming, despite the fact that it's not, right? And that, everybody's going to want to be investing in America and buying U.S. assets, and then there's no inflation, right? There's never going to be any more inflation. It's been vanquished forever. We'll never see its ugly head again. And so if everything is great, if the markets can't go down, if the central bankers have everything perfectly under control, we're never going to have inflation, or have all the people, why buy gold? And then it's like, well, even if you want to, just buy the Bitcoin, because Bitcoin can go up even more than gold, and so people aren't buying. But look what happened with the VIX recently. With volatility index, people were buying that because they thought volatility would never pick up. All of a sudden, it shoots up, and some people get clobbered and lose a lot of money. But I think at some point, it's going to dawn on people what's going on, and they're going to try to buy gold en masse. The problem is there's not going to be much gold for sale. So at some point, the price is just going to go ballistic. I just don't know when that is. I'm just telling people to buy it before it happens, because if you don't own it and then it takes off, it's going to be too late to try to chase the market. So, buy before the crowd.
Is gold, particularly silver, is it like Bitcoin at like, $25 a unit? Is that where we are in your estimation of how cheap it is? Wow. How cheap is gold and how cheap is silver?
Well, I don't really think you can compare it to Bitcoin or these, because I don't think those cryptocurrencies have any real value. They're just speculative tokens. So, and I don't expect the price of gold to deliver the type of returns that people achieved with Bitcoin if they bought it for a few bucks of Bitcoin and sold out at 20,000. I mean, people were able to make a tremendous amount of money. I'm not looking for those kind of returns in gold. I mean, if gold does go to 20,000, which it could do, the price of everything else is going up too. So on a relative basis, it's not going to feel like 20,000 because, oil might be $400 a barrel. I mean, everything's going to get more expensive. It's not going to be happening in a vacuum like you have with Bitcoin. But if you look historically at the price of gold relative to the cost to mine it, if you look at the price of gold relative to the money supply, if you look at the price of gold relative to the market cap, of the stock market, all these historic measures of where gold is will reveal that gold is extremely inexpensive. And it is inexpensive because so many people have the wrong view of the state of the U.S. economy and where we're headed and where monetary policy is headed. And that's where the value is, because so few people don't understand, just like they didn't understand the problems before the 2008 financial crisis. I understood the problem, so I was expecting that crisis. The same people who were oblivious to them back then are equally oblivious to the problems today. So they're not buying gold, but eventually they will, except they're going to be paying much higher prices.
Some people just can't buy gold. I mean, $1,300. I mean, a lot of people, I don't know, 75% of people are paycheck to paycheck. Would you tell people to go buy silver? I mean, that's a cheap hedge.
Well, look, you can buy both. It's anyone that can buy silver can buy gold. I mean, obviously, gold is less expensive to store, but look, you can go to goldmoney.com and you can buy $10, $50, $100 worth of gold. So it's not even a question of, you don't even have to buy a full ounce. You can buy, grams of gold, and so it's easy to buy gold and silver. And in fact, Gold Money makes it easy to use your gold and silver as a medium of exchange. So you can save it, you can earn it. You can spend it, you can gift it, you can transact in it. I mean, you can actually do all the things that people thought you could do with Bitcoin, but you can't because it's too volatile and it's too expensive to transact in. You can actually do it in gold and silver thanks to Gold Money. So, I mean, people should be opening up accounts over there and owning some gold and silver, but also take advantage of what's going to happen in the foreign stock markets. Because if I'm right, when the Fed has to admit that it can't, raise rates and it has to do QE4, when the dollar tanks, you're going to see a rush of money out of U.S. assets into the emerging markets, into foreign stocks. And, that trade, played out very well between 2002 and 2008. I think it's going to work out even better this time. And I think it's not going to end with a financial crisis where the dollar goes up. I think it's going to end in a dollar crisis where, it falls through the floor.
And your numero uno prediction, whether stock market goes to 40,000 or 10,000, you're saying the dollar is going to get spanked. It's going lower. And I had one guest on saying that they want it to go lower. They want it to go lower. But you think your big prediction is the dollar is headed down.
Yeah, look, be careful what you wish for. A weakening currency is not a good thing. It's a bad thing because it's a measure of your standard of living, of your purchasing power. Especially for Americans, we have to import so much because we don't produce ourselves, and we need to exchange the money we print for the goods that everybody else produces. And if the dollar loses value, then we can't do that, or it's going to reduce our ability to consume. It's going to reduce our standard of living. But look, the dollar just had this big drop. I said last year, biggest drop in 14 years. This year, we're off to the worst start since '87. But think about the environment in which this is happening. Everybody is optimistic on the U.S. economy. Everybody is optimistic on the Fed continuing to raise rates, shrinking its balance sheet. You have all this stuff that should be bullish for the dollar, yet the dollar is falling.
Wow.
So if the dollar is falling when everybody thinks things are great, imagine what happens to the dollar when they realize that they were wrong. What happens to the dollar when we're back in recession? What happens to the dollar when interest rates go back to zero? What happens to the dollar when we do QE4? I mean, so if it's this weak now, you can imagine how much weak it's going to be in the future. But, rather than imagining it, just prepare for it. Create a portfolio that will benefit from the dollar's decline.
Peter Schiff, thanks for coming on and throwing strikes right over the plate, man. Right over the plate. They're lost not having you back on. They're stupid for doing that. They ought to be out there in the truth business, not the spin business. But I digress. I used to work at ABC and CNN. Because I was putting people on like you. I didn't have you actually on, but people were talking in 2008 that this thing's going to blow up. We're in a recession. That it's not going to be contained, the subprime thing, and you were out there with your crash. Also, your book, The Real Crash. You did write a book about the real crash. That was a few years ago, right? I mean, you own this.
The real crash is the one that's coming.
Yeah.
Right. It's not the one we had in '08. I predicted that one, but as the precursor to the next one, because my thesis when I wrote Crash Proof was that the Fed had created a bubble, right, in the real estate market with cheap money. That when that bubble burst, we would have the worst recession since the Great Depression. We would have double-digit unemployment, trillion-dollar budget deficits, that Fannie and Freddie would go bankrupt, that we'd have this financial crisis. All that happened. I also wrote back then that the Fed would respond to this by slashing interest rates, printing a bunch of money. I didn't know they would call it quantitative easing. I just knew they would do it. And they did exactly what I said. And then I wrote that as a result of that mistake, of all that money printing, of all that 0% rates or whatever, that they would attempt to reflate the bubbles in the stock market and the real estate market, but that all the money they had to create to do that would produce a dollar crisis. That is the only piece of the puzzle that hasn't happened yet. I'm still confident, in fact, more than ever, that it's going to happen. The only thing I got wrong is I thought that they would attempt to reflate the bubbles. I did not realize they would succeed. They actually made the bubbles bigger than they were before they popped. And so now the crash in the dollar that I envisioned and the crash in the U.S. economy is going to be much bigger, much more dramatic and devastating to the average American as a result of the delay. So we haven't dodged the bullet, right? We've ended up stepping on an even bigger landmine.
And, a lot of people think that they can, like if you just look at last Friday and Monday, 666 or 665.75, and then almost 1,200 on Monday, you can't get out of the way of that. I mean, you can't. Yeah, when that happens, so you got to do something ahead of time, like now. Is that what you're saying?
If you look at those 5 days, if you look at the lows on Monday night in Asia trading, the Dow futures were down about 13% in 5 days. That shows you how quickly these markets can move. And, there wasn't any real bad news that came out. Imagine how fast the market could go down if we actually get some real bad news. So that's just a warning sign of what can happen. Now, everybody is saying, oh, don't worry, relax. This is just a normal, healthy correction. Look, there's nothing normal or healthy about it. And it reveals an underlying problem in the market. And, they want you to just ignore it and pretend it doesn't exist. But that's what they were saying right before the financial crisis. And if it wasn't for the Fed's ability to reflate the bubbles, people would have been wiped out in 2008. But the Fed is not going to be able to do it again. Right, the third time is not going to be the charm. It's going to be 3 strikes and we're out.
Peter Schiff, your words of wisdom are good ones. If you're going to do something, do it now. If you're going to prepare, do it now. Is that what you're saying?
Yep, that's what we're doing at Euro Pacific Capital. I mean, just call us up, open up an account, get going, Europac.com, schiffgold.com. I mean, be prepared, right? Take advantage of what's about to happen. It's not only preserving your wealth, but actually growing your wealth. You actually have the opportunity now to do both. And I suggest that people take advantage of it while the window of opportunity is still open.
Yeah, I'll put the links up in the after the interview section for Europac and Schiff Gold. Peter Schiff, thank you for joining us today on USAWatchdog.com. You threw some fastballs right over the plate, my friend. Thank you very much.
Thank you.